Robinhood just tokenized Apple and Tesla, which sent Hood share prices soaring to a new all-time high. But you can't withdraw, you can't swap, and you still need full KYC. Meanwhile, the real on-chain stock market is already live on Solana, and the first staking ETF just started trading under the ticker symbol SSK. The polymarket approval odds for a spot Solana ETF by July 31st have now risen to 99%, and JP Morgan says the subsequent wave of inflows to Solana could top $6 billion. Now, we have price targets ranging from $500 to $3,000, so here's why the Solana Staking ETF and on-chain tokenized stocks are far more interesting than Robinhood's little stunt during ETHCC.
I'm feeling really good. I mean, I think that there was one technical glitch, which you probably noticed.
Oh, the slow connectivity? I thought that was easily overcomeable.
Yeah. So what happened was so many people were downloading the app and trying to get the stock tokens that it brought down the network.
Robinhood's not-so-smooth launch of tokenized stocks like Tesla, Apple, and OpenAI was because of too many downloads. Great. But they had an even bigger problem when OpenAI disavowed the news altogether, saying, "We did not partner with Robinhood, we were not involved in this, and we do not endorse it. Any transfer of OpenAI equity requires approval. We did not approve any transfer. Please be careful." That's a massive ouchie, but it's not the first time Robinhood has struggled to meet expectations. Remember when Robinhood forced its users to dump Sol around $10? Vlad was last cycle's villain because he argued that forcing users to sell an asset like Sol at its lowest was done to protect the users. Well, there's more, because Robinhood was also the lead villain in 2021's GameStop saga when the GME stock price ran hundreds of %. The brokerage ran out of liquidity to pay their customers, so they had to stop trading, which of course forced their users to lose huge sums of potential gains. And they rightly ended up facing dozens of lawsuits for stock manipulation back then. Oh, and despite the impressive stock price that we've seen these past few months, Robinhood had the worst performing IPO of its size back in late 2021. Now, the controversy continues in 2025. As Beanie reminds us, they were responsible for the single largest retail trader in history. So, cool suit, Vlad, but your tokenized stocks are still trapped in your app. That's not even close to being DeFi. Meanwhile, Solana is now leading the way with tokenized asset volumes already. It's leaving even Base behind. And as Tolly points out, this looks like rapidly accelerating baby steps. So while Robinhood ships yet another walled garden, Solana's been busy building a permissionless Wall Street for over 200 million wallets, which are already active on centralized exchanges like Bybit and OKX, and of course wallets like Phantom and Solflare. So anyone in the world can now get access to US stocks with just an internet connection. You've also got names like Remora Markets, Ondo, and Superstate, which are all bringing their tokenized offerings on-chain through Solana. Remora is building an RWA DEX to bring stocks like Nvidia, Tesla, and Microsoft, and of course more on-chain, meaning they can be traded anytime, anywhere. Ondo is bringing tokenized treasuries like ETFs on-chain, while Robert Lesch's Superstate is tokenizing equities like Sol Strategies and more. It's quite wild to think users can now swap between meme coins like Fartcoin and popular US stocks like Tesla or Nvidia without even leaving their Solana wallets. Internet capital markets are being built on Solana, not some centralized VC-backed brokerage like Robinhood, which can and will halt trading whenever they please. Now, we'll be doing a further deep dive on tokenized stonks very soon, so you can of course subscribe to SolanaFloor to stay ahead of the curve. But that's far from all, because Solana also stole the spotlight from Robinhood with the first ever staking-enabled ETF dominating the headlines for a whole week.
Rex and Osprey have launched the first US-listed Solana staking ETF, giving investors a new way to gain exposure to Solana while also earning staking rewards. Unlike traditional ETFs that only track prices, this one is designed to actually participate in Solana's network by staking the tokens it holds. That means investors not only get access to Solana price movements, but also benefit from the staking yield, which currently sits around 7.3%.
The ticker is SSK, and it launched with $12 million in inflows and $33 million in trading volume on day one alone, which is beyond impressive given the approval somewhat took the market by surprise. Leading up to the approval, there were of course some regulatory hurdles, but these were bypassed by allocating 40% of the ETF's assets to non-US exchange-traded products, which essentially allowed the ETF issuers to avoid the standard SEC approval processes. Now, if you ask leading analysts like Eric Balchunas and James Seyfarth about SSK, they'll tell you it's a sign of rising institutional interest. And they're right. as we saw from SSK reaching $8 million in trading volume in the first 20 minutes alone. Now, by the end of day one, SSK has recorded an impressive $33 million in volume, which blows away the Solana Futures ETF and XRP Futures ETF's performances altogether. But SSK is still far behind the Bitcoin and Ether Spot ETF performances in terms of trading volumes. So, a Solana staking ETF is live with impressive trading volumes on day one, but why does this matter for us? Well, primarily because the staking ETF paves the way for a fully approved spot Solana ETF potentially arriving very, very soon. Here's Bitwise Chief Investment Officer Matt Hogan's take on that approval timeline.
It could be near term. There is certainly the polymarket odds put Solana ETFs at a 98% chance of launching in July. That's pretty optimistic. I think the market is right to be looking towards July, but there's no guarantee. I would suspect by the end of this fall, if that's sort of the timeline by which the SEC has to decide. But it could be any time. It could be this week, it could be next week, it could be near term. I think all signs are pointing in the direction of a potential approval, which is pretty exciting.
Polymarket odds for this approval are now at an insane 99% by the end of this month, and the significance of this cannot be understated, because analysts think that the Rex-Osprey Staking ETF has paved the way for crypto ETF summer, which could theoretically lead to billions of dollars of inflows.
So I do think this is going to be a successful category. Solana ETFs are likely to be successful. This product isn't the simplest, easiest way of getting exposure, but it is a way to get exposure earlier than any of their competitors for Rex-Osprey. So that's a big win for them. And it just shows the SEC is moving forward towards this direction of allowing staking exposure, allowing exposure to these other digital assets, which is something that us and BI have been saying is going to happen in the second half of this year, basically since the start of this year. So yeah, things are moving in the right direction as far as we're concerned.
What's really exciting is that the Solana ETFs have massive shoes to fill, because the largest Bitcoin ETF, which is BlackRock's IBIT, has already reached $75 billion since its launch in January of last year. But what's even more impressive and relevant to crypto is that the ETF now generates more revenue for BlackRock than its largest ETF, which tracks the S&P 500 itself. So while Solana ETFs will almost certainly not attract $75 billion in the first year, this is absolutely a massive indicator that ETF issuers are soon going to be falling over themselves to try and launch more of these instruments in the coming months. Eric Balchunas even said that investors should get ready for a potential altcoin ETF summer, with Solana likely leading the way, which gives traditional investors like boomers new avenues to get exposure to crypto, meaning we'll likely see even more buy pressure on assets like Sol. So what exactly is a staking ETF? Most crypto ETFs are passive, meaning they track the price of a coin, but that's basically it. There's no staking, there's no yield, and most importantly, there's no on-chain exposure to the asset. A staking ETF, on the other hand, is different, because when you stake Solana, you help to secure the network in return for yield. And it's really this yield component that makes the new ETFs so attractive. So very quickly, why did Rex shares choose Solana, and how do these pending ETFs stack up against each other? The answer basically comes down to performance and positioning. Solana outperformed its peers in 2024 and 2025 by multiple metrics like users, DEX volumes, and even developer count. So let's quickly compare these Solana ETFs. The Solana-based ETPs have already attracted $21.6 million of inflows in a week alone. That's the highest level of inflows in 69 weeks. Now, as we're nearing this fresh line for SEC approvals for spot Solana ETFs, 8 firms are officially in the race. Every single one of them has now amended their filings to include staking support, which is exactly what the SEC requested. So here's the quick rundown. VanEck has over $116 billion in assets under management and was among the first group to file. They already offer Sol staking in Europe with Kiln. 21 shares filed days later using Coinbase as their staking provider in Europe. We also have Canary Capital, which is a smaller firm known for filing altcoin ETFs like Sei and Pengu. Bitwise is running a Sol staking ETP in Europe in partnership with Marinade. Grayscale is looking to convert GSOL into an ETF, just like they did with BTC and ETH, and we're still waiting for SEC clarity on that one. Franklin Templeton has over $1.5 trillion in assets under management and has a money market fund which is already live on Solana. Fidelity is another behemoth with around $15 trillion in assets under administration, second only to BlackRock for Bitcoin ETF inflows, so huge potential firepower, and their filing got delayed by the SEC as expected. And finally, CoinShares was a late entrant but a seasoned ETP issuer in Europe, which is now joining the Solana ETF race as well. So what about that $6 billion question? JP Morgan predicted back in January that a spot SOL ETF approval could attract between $3 and $6 billion in the first year, although they are yet to update that figure. Other analysts who we've had join us on SolanaFloor have argued that SOL could 5x by year-end, and some believe that a longer price target of $2,500 is possible for Solana. This time last year, VanEck had given a $3,200 bull case for SOL. So here's Truth Network founder and former Bitcoin.com CEO Stefan Rust joining us here at SolanaFloor to explain what he thinks the inflows are going to look like, and perhaps not so surprisingly, what he really thinks about ETFs.
I think Solana will be between what Bitcoin experienced and what Ethereum experienced. I think it will be better than Ethereum's experience. Why? Because it's later. There's a gap window between the next big ETF being issued and Bitcoin was the first. It was really out there. There was a pent-up demand by participants that wanted to get involved and really found this ETF as a way to do so. And that drove a lot of traffic to the Bitcoin way. And so I think it'll be in the middle. Personally, I'm not a big fan of ETFs. I think ETFs is giving the existing institutions ways to custody people's crypto. And the whole point around crypto and the culture behind crypto was to self-custody and be not beholden to institutions that can drive the policies around how your assets are being allocated and being managed. So, but if people are willing to pay a 0.5% fee or whatever to manage their own crypto assets, and as such, it is a product that enters into the market, adds liquidity and demand. So it's a good thing, but I think the people that are in crypto right now are it's not really, I don't think it's actually in the long run really going to move the needle.
So yeah, Robinhood's tokenized stocks could turn out to be a complete nothing burger because they're still locked in the app, they're still KYC'd, and they're still far from DeFi. OpenAI even denounced having anything to do with the so-called OpenAI shares being offered by Robinhood. So all in all, not a great look. Meanwhile, the tokenized equities with Remora and xStocks are far more exciting, and the staking-enabled ETF by Rex-Osprey is already bringing millions of dollars of fresh liquidity on-chain. Now, here's a very quick reminder that none of the information on SolanaFloor is legal, financial, or investment advice. In the coming weeks, we will keep talking to the experts and the analysts to really get a sense of where we are in the cycle and where alt season might be headed. So if you want that alpha before it hits the mainstream, you can of course subscribe to SolanaFloor and drop a comment below. Which tokenized stocks would you be curious to trade first? Thank you very much for tuning in, and I'll see you next time for more of the very latest.